Beautiful people, how are you? Yep, it's the Market Sniper. Great to be with you. And we're going to talk about uranium. That's right, uranium. Our opinion is the uranium market is about to throw it down. I know a lot of fans, all homage to the great king that is Rick Rule. He really highlights the fundamentals and is one of the best shared minds on YouTube for this market and got the market right for that big up leg. But we are also macro technical and traders, and there's a potential demand destroying event which I'll touch on the way. Energies are in overall, I think, are in trouble. We've already called the crash on natural gas. We think you're getting a rollover point here on uranium, and we expecting and already beginning to see oil closing the upside gap on the production cuts. It was amazing to us to make macro technical calls and to get literally a day and 2 days later from people saying to us, hey, you're wrong on your call. This is macro technical. This means, you know, you make a macro technical call, doesn't happen next hour, next day. Particularly if you make that technical call just as the likes of Russia and Saudi get together and agree cuts. Of course, you get upside gaps on that news. We released that literally the day before, I believe it was, before that upside cut, and everyone going, straight away, you're wrong. No. Nobody cuts oil production in a strong demanded environment where price is strong. That is price management. That is a price management tool, and it's one of the reasons it'll be the last to roll, because there is a cartel actively managing the price via supply throttling. However, we have seen already when we go to the charts what went on with natural gas. A quick reminder maybe is due. Many people want to call a bottom there, and I'm saying hold on, before you do that we need to discuss the overall demand destroying events. So for that I am going to take you to a quick heads up on where we are on the macroeconomic side. How awesome is the demand? So just taking a couple of fundamental points that have been out there in terms of what's going on macroeconomically here in this Word document as we refer to the screens. US producer prices increased only 2.75% over the last year, the 9th consecutive decline. That's obviously off the back of the huge and very violent acceleration in rate hikes by the Fed after denying that there was much inflation, then saying it was transitory, and then making every excuse in the book for being late to the game. The year ahead business inflation expectations continue to fall, down to 2.8 in the Atlanta Fed survey. That's the lowest seen since July 21. That's heading for 2 years ago now. Container freight rates, that is a big sign of economic activity, are now lower than they were in February 2020. That is just pre the lockdown COVIDs, but in a very, very stalled economic environment, which is 87% down from their peak. So that is an absolute killer of a dip on containers. That is economic activity, things being pushed backwards and forwards around the planet and the world. US import prices fell 4.6% over the last year. That means falling prices, not only went up 4.6, falling, the largest year-on-year decline since May 2020. Again, May 2020, that critical month that followed April and March. So that was the event, the demand-destroying event of total economic closure. Asking rents are lower. Rents generally don't go lower. They go sideways for long periods on properties. It's very rare that they go lower. You have to have a real glut situation where landlords start taking lower rents than what they had before. This is all in an environment where people's new car payments skyrocketed to an average of $777, double the average payment in late 2019. That's the Kelly Blue Book data. This is your subprime cars. Nearly 17% of consumers who financed the car in the quarter of 2023 had a monthly payment of $1,000 or more. That is a record high. Remember, most people aren't on $100,000, $250,000 a year. $1,000 or more when you're going up from a substantially lower level, which is normally 300, 400, 500 for a second-hand car, now going 777 on average, and 17% of the consumers, that's almost a fifth, are paying 1,000 or more, a record high, and that's on these higher interest rates. So what do you think that does for disposable income? Well, keeping your car suddenly means there's much less money for other things. Something to remember from the Volcker era, by the way, is that he actually went from negative real interest rates of -3% to positive real interest rates. That's the point at which inflation minus the actual governing interest rates is positive or negative. So at one point, inflation was 3% higher than the governing interest rates, to suddenly the inflation level was 9.3% lower than the governing inflation rate. That is what we call, our friends, as Bill Bonner in this passage has noted, there's no pain, no gain. This is the no pain, no gain economy. And you've got to take pain to get some of the gain back of that over runaway inflation, to get that space back on that runaway monster of inflation. It's got to be a pain economy. So this comes back and brings us back to our trading charts that we've been referring to. And this is energy demand is the Rockefeller tax. Oil has the cartel that can do the most to defend the price, but gas has already fallen. We've covered that. We did it. We showed you the head and shoulders when it hit, when it was going through 5.4 on a neckline at a touch 10. We said you're going twos. We're going twos on gas, all on a head and shoulder. This right here is my favorite short. Our community is already in. You're now being invited to join us on this trade. Subsequently, you've got a 4-hour structure and setup right here. That is absolute spiller. That is a gap and a runner. And this is a small structure. But is it just going from these two levels to 178? No. I'm going to take you through the time frames. Go to the daily time frame and you'll see you're actually in a far larger structure. So this has already broken. It broke up here in the blue box. This is Uranium Royalty Corp that we are showing you as our pick of the shorts on the uranium side, but there are many others that can be taken. We have shown and shared a few. There are many others that are detailed extensively in our community. For this live update, if you consider this valuable, hit the like button right now. We've got more to share with you, and if you appreciate this and you give us likes and you push us up the algorithm, we'll contemplate doing more of them. So book the call on the very first link below. Key level 230. You will be talking about that blue line in a bit with you. But this structure had already broken, which is why I like this one. It was already in breakout mode. This was a little wind-up structure. So it had already given up the ghost, meaning it's probably one of the weakest. The earliest runners are usually your best. And especially when they give you the technical structures that you want. So you're getting a technical structure here on the 4-hour. I've taken you up to the daily. You're getting a technical structure on the daily. This is what I call multiplying your way to wealth, because you break your way into this trade. Look how tight this risk reward is. It's literally, this fat cookie is your entire risk component. But how far is the reward? It's not going to 163 either, is it? No, it's not. In fact, we're adding a third structure on an even bigger time frame, and I'm taking you up to the 3 daily chart, and this is in log scale to get everything in. This is your bull market. This is where Rick Rule and his fundamental analysis was absolutely spot on, and you got this run, and there it went, and it went, and it went, and then so it goes. And here's a neckline for a left shoulder. That's it over there. Head, double head down to your 230 neckline, and your iceberging, that's right, sitting in the water of that 2.3 inverted HVF structure right there that is breaking down, and we see that taking you to 91 cents. That's right. So let's just pause here. You could have got short here anywhere in this blue box zone, as high up as, let's give you a true value. If you were in our community, you might have already been short. I have been short this for an extended period. You could have been short in and around the 243s, 244s. You could have taken the head and shoulder trigger on the 230s. You could have already been in this. You're now going to be jumping in at the 190s. It's still not bad, and you can use that element as a stop. Bear in mind, if it were to have a quick zig and then zag back down, you might be out, but we'll still be in because we're earlier and we've got stops higher up. And the overall target we're looking for is a sub $1. You're talking a 91 cents. That's quite possibly we'll see the 80 cents evens for this particular trade. By the way, there are similar structures. This is not unique. There are similar structures. This is our favored trade, and as I say, you're arriving late, but still very early. But you can see the similar structure type events in URC where we are looking for downside. Again, this one's already triggered, also in a head and shoulder. You could be short at 2.59. You're looking at a 1, 2, 3. Uranium, that's it's Uranium Royalty Corp on it's the same company, my apologies. That's a Toronto exchange. A different code. I thought it was a different company. That's a different listing of the same thing. What about 4Us? Let's get our story straight. The 4Us over here, this grind line, friends. This one's just a little bit later to jump. As I say, I prefer the first runners, but you've got that little squeezy. You've got a head and shoulder up top here. Again, on the 3-time level. This is your uranium trade, friends. You might have got short on the breaking of a grind line, but you'd need grind line theory. First link in the details below. Come and understand how we trade. Learn a little bit, implement it practically in the markets with us as we bring and work through the key trades. Here's your wind up at that neckline, 490 down to 209. That is, guys, you're talking about $5, never mind the fact that you might have been in here in the $6 mark, down to 2s, likely to run 190s. You're talking about people making calls for $6 plus and saying it's going to trade $1.9s. 1.9s. You're talking about 66% market cap plus decimations. You know, up to 70 to the downside. I mean, how many guys show up on YouTube and say, here's a loss of value. Look at that risk reward ratio as well. All our RRRs are tempting. Most traders are not getting the RRRs, 9 RRR. I've just showed you one that's 19. What else do you get in the idea of uranium? Well, you've got Sprott. Many of you will know of Sprott. Let's clear up there. I know Rick Rule was involved in that. Also looking ropey, also looking on the ropes. We could see this one doing a similar dip to the downside. I'd take a look at the daily for that one. This is looking tiny bit like localized scraggy structure waiting to roll. The others have already begun rolling, so this probably the slightly better supported one for now, but that is a problem. That is a problem, and the overall structure is a problem. So we see downside over there to 727. You're looking at something that's 11s at the moment. 11s at the moment, and that's assuming there's no head and shoulder in this one for a deeper rollover. This points to some demand destroying events, friends. As we said on energy, people coming out to tell us how wrong we are the next day that a production output cut happens on the oil. Well, I've just added to my original oil short that went into the red because it's easier to trade than uranium, and I have a number of these uranium shorts. What about URNM? Also looking a little bit scraggy. Had a great move. Again, head and shoulder structure. We should probably do that on the 3-dayer so that we don't. Had beautiful runs. Full credit. Beautiful runs. But now you're looking at a point where they may have got a little bit overshot. Look at that. Break of the grind line, little broadening structure to go back up. These things could start to spill. But at the moment, uranium royalty is leading the charge and has already broken. And that's why I like it. So get in on the early ones. Let's just pass by that oil. So oil went into the 80s, but hold on, what's happening now? Let's take it down. Let's take it down. People do not issue cuts out of the blue without a reason. So there's your gap. You've begun on the journey to closing that gap, in my opinion. You've begun on the journey on closing that gap. Again, also a head and structure potential here. Don't forget, we are the guys. Go look at the link below on the macro oil trade. We called that top on that sell-off, right on the low time frame, as well as single-digit oils on the bottom. We don't do too badly when it comes to oil. We've suggested you would overperform on a breakout of a macro falling wedge on oil. So, you know, don't rush to call us wrong. We might be a tad early if they're going to do cuts in production. But generally, there is real risk to the global economy now. We went into recession when we met the criteria for recession a long time ago, and they continued to do interest rate hikes, my friend. So by the way, this economy is weak, and they may well do a little bit more on the hike fronts to add some further pain to this game. So I would expect to see that having a real effect on energies. There might be other instances. Uranium looking vulnerable. Maybe there's something on the nuclear front that could be a problem, some specific news, or it's just going to be general demand destruction. In other words, less people wanting less things, doing less moving, less heating, less everything. Activity. Energies are an activity tax, and whilst they're not totally substitutable, it's really important. Okay, that was it. I hope you found that interesting. Watch out, be cautious, don't be over assumptive. In the event of a demand destruction event, this can have an effect also on the likes of your anti-fiats as well. I don't want to spread into other topics overall, but watch out. Uranium is weak. Uranium is weak in our opinion. It is following possibly the flight path of natural gas, which we showed you, which was a head and shoulders. There was a 10 run. There you were triggering at 7.9. On the first head and shoulder, and then you triggered again at 5.4s. You triggered on a shorter time frame structured head and shoulder way back at 7.8s, and you went right the way down, met this neckline, and then have now run further down. Do I think natural gas is going to carry the bulk of the downside? No, it's been hammered first and hardest. So I think it's taken the most of the beating. At some point it will become a buy. It's going lower vol at the moment. But I do think some of that pain's now going to roll into uranium. And you've started to see a little bit of an easing and a look at that news-related gap that was generated by production cuts, which is all about protecting the oil price and everything that goes. So there we go. We've done your update for you on energies. Don't forget, you can join our community by clicking the link below. You can purchase pure gold, that's right, and silver and bars and coins and everything else utilizing the link below. SimpleFX is there. We're utilizing that to use our crypto as collateral to short things like oil and go long things like Bitcoin and gold and silver. You can utilize those all below. It also supports us. We appreciate it, and we thank you, and we'll catch you next time. All the best for now.